All right, everybody, welcome. It is Thursday, December 14th, 2023. We're going to jump into our futures pre-market forecast here in just a second. Quickly, I want to recap the trades from the Nasdaq yesterday after the FOMC interest rate decision. If you look at the screen here, you'll see this is my Nasdaq intraday volume-based chart here. So the FOMC was during this period here. Powell was speaking. A lot of people were buying as he was speaking and fielding questions. And then there was a pretty good reversal here for about 100 points on the Nasdaq. And a lot of people got stuck on that. I was patiently waiting for that pullback. Sometimes they don't come. You've got to sit on your hands. You've got to have patience. You have to be comfortable missing out on the move if it keeps going without you, but you can't jump into an overextended market. So yesterday was a really good example of this. I filmed it. It's on the channel. You can see me there waiting for the setup, exercising patience and discipline. And that really is the key to long-term, consistent, successful trading. So here on the Nasdaq, what you can see is that once we pulled back down to this extension area using OMA at about 16,700, I was looking for a flush of some stops, and I saw it come in very clearly here on the Renko chart. I got long at just above 16,700 right here, and then took profit right up in here. Got a nice chunk of this move, and the reason I took the profit there was because we were heading into the close, and the close can be very, very volatile as you get these different flows coming in, and you can see wild moves one way or the other. I was getting tired here in Sweden. It was approaching 10 o'clock at night, so I was happy to make that money. I set one more order to get long right in here, and it got filled, and I took more profit right up in here. So a couple of good trades, but the point I want to make is that these trades were successful and profitable because I patiently waited for them. I waited for the market to come to me. I knew the spot. I was interested in getting long. And then when the market came down there, I didn't hesitate. I watched my intraday charts and I put on the trade. So that really is the key. And I think one of the biggest problems I'm seeing out here on YouTube land right now in terms of these live traders is that they're over trading. And I understand that they're more interested in entertainment and making the channel fun, and some of these channels are a lot of fun. I like to watch them and interact, but you really need to be able to differentiate the entertainment aspect of trading and the actual serious aspect where you want to learn and make money. I mean, there's a big difference between those two things. So just keep that in mind, and remember that if you're trading for yourself, over trading is going to be the quickest way to blowing up your account. It's going to cause you to slip into FOMO. It's not going to be a good situation. So really, really think about that. If you're taking too many trades every day, it's likely that you're not going to be successful over the long run. So it's not about the quantity of the trades you take in futures trading. It's about the quality. Wait for your setups, and then when they come, don't hesitate. Execute, put them on, let them go to your target area, make your money, and then get out. Exit the casino, because the odds are the longer you stare at the chart, especially after you've had a nice winning trade, you're going to probably be tempted to give some back, right? So just be careful about that. It's not a bad thing to book your profits and get out and go enjoy the rest of your day. All right, so I want to give you that little recap there from yesterday. Today, we do have retail sales at 8:30 in the U.S. That's a big one. We've got the Bank of England interest rate decision at 7 a.m. Eastern. I won't be watching that. I'll be at the gym. We've got the ECB coming out at 8:15 with their interest rate decision. And then the ECB press conference is the big one at 8:45 a.m. Eastern. So be aware of that. That press conference will make the market move, especially on the heels of retail sales at 8:30. So you got a 1-2 punch there. Boom, boom. Look out for that. Be careful with your trading. I will be trading it and recording it, and I will upload it to the channel for you guys later. And like I said, we will live stream together at some point. I just got to figure out how to do it where I'm able to focus on my trading first and foremost and not turn it into an entertainment channel, because that's not the point. The point is to trade and make money. Is how I make my living, and I want to help teach you guys how to potentially make a living with it as well. So once I figure out how to combine those two things, then we will go ahead and do a bit of live streaming together at some point. But for now, I'm just uploading my live sessions so you can see the process I go through in selecting my trades very, very carefully. All right, with all that said, let's go ahead and jump into the forecast for today. We'll look at the ES, the NQ, the Dow, the YM, and then we'll look at the bonds, gold, silver, crude, some currencies, and Bitcoin for the Bitcoin bros. Always important. Don't want to leave you guys out. All right, let's go ahead and look at the ES here first. And now, before I even jump into the charts, it's really important to recognize the fact that Powell was extremely dovish yesterday. I mean, he couldn't have been more dovish. So the punch bowl has been spiked. Stocks, for now, have the floor of liquidity they need. The promise from Powell, basically, that they will indeed start easing rates early next year, it looks like, for now. So I think stocks are going to be well supported, not only on this fundamental picture, but on the technical picture as well. So keep that in mind. All right, so here is ES. I'm not going to go into all of the details. We got the monthly chart here to the left, the weekly chart in the middle, the daily chart to the far right. And you can see we've been calling this for the last few days in the pre-market forecast that this market is bullish. And the reason we've been saying that the market is bullish is because the weekly, the daily, and the caveat, the monthly, all three charts are bullish. And you've got that with the backdrop of bonds that are slowly grinding higher, meaning rates are coming down, the dollar's starting to weaken again a little bit. So you've got a very rosy picture here for stocks. Very important. All right, so for today, I do expect the bullishness to continue for the indices. I will be trading the Nasdaq myself. On the ES here, you've got a lot of broken resistance that should now be support, according to OMA, coming in at about 47.30. And the same, that's on the weekly chart. The same thing with the daily. You've got a crossover support here also at about 47.30 with that low connector trend line further enforcing that area there, excuse me. So you've got a lot of support into that 47.30 level for ES. And this is just one of those situations. I keep pointing this out. You guys got to be very, very careful from the short side right now, because everything is pushing higher and shorts are getting crushed. They're getting squeezed. So just be aware of that. And unless you're a very experienced trader and you know exactly what you're doing in terms of going short, just don't short right now. I'm not shorting right now because there's no point. Just wait for the pullbacks and, take the low-hanging fruit, right? Just wait for the pullbacks in the bullish market, get long, get your money, and get out. Very important. All right, so ES bullish. Let's look at the Nasdaq. Also extremely bullish. I don't need to beat the horse with a stick here, but basically what we're looking at is a lot of support coming in here on the Nasdaq at all that broken resistance, and that number is right around, between 16,650 and 16,700. On the daily, you can see it's coming in here. I'm not so sure we're going to pull back very much today. So, depending on the price action, depending on, what the Bank of England and the European Central Bank do with their interest rate decisions, depending on what Lagarde, the head of the ECB, what she says at her press conference at 8:45 a.m. Eastern. Obviously, some of these things can cause a little bit of volatility, but I'm going to use that volatility as an opportunity to get long. Hopefully, Lagarde will say something extremely hawkish and knock stocks back a little bit so we get an opportunity to get long again at a good price, just like we did at the end of Jay Powell's press conference yesterday, which I display in the live trading video, which I encourage you to check out if you're interested in learning how to actually become a consistently profitable trader. So what you can see here on the NASDAQ, it's going to be difficult, I think, for the NASDAQ to get back below 16.7, but anywhere in that area here. And that's why I have the intraday charts that I use to fine tune where those levels are going to be. I don't just go blindly in on the daily, even though the daily, the weekly, the monthly, they're all bullish. Sure, if you're a longer term trader, you just buy and, you know, sit through all the ups and downs. I day trade, so I look for very specific spots to get long during the day when I see this bullish picture on the monthly, the weekly, the daily charts. All right, so let's look at the Dow now, YM. So you can see here on the Dow, I mean, we hit record highs yesterday, and we'll see. I don't think it's going to stop for now because everything continues to look very bullish. So just look for a lot of support on the Dow into just below 37.4. I mean, probably going to keep going here, but the Dow is definitely the most overextended. I would say that because the Dow has hit record highs now, I mean, the Nasdaq should very quickly race up to its record highs, S&P as well. So I'll be trading the Nasdaq. But for those of you trading the Dow, it looks like this is going to continue to push higher along with the E-mini S&P 500 and the Nasdaq. Let's go ahead and jump over to the 10-year Treasury note. And you can see here, called this out at the beginning of the week. Lots of support into 110 for the 10-year. And sure enough, we are exploding higher. Why? Because yields are going off a cliff, and this is what's causing the stock market to have that support and race to the upside. So very important. It looks like the 10-year will continue to be quite strong today. I'm not going to go into too much detail here on the bonds. We'll look at the 30-year here quickly. I mean, the Ultra and the 30-year are already up almost 1%, and it looks like they're just going to continue to push higher. Everything Powell said yesterday is just so bullish for bonds, bullish for stocks, yields dropping, falling off a cliff. And until something changes, that's the narrative that we've got for right now. It looks like we've got the Santa Claus rally well intact. We've got the election year. We know that those are usually good for stocks. So right now, stocks are incredibly bullish, as are bonds, and it's a really good opportunity for those of us who know what we're doing to take some money out of these markets heading into Christmas. All right, let's go ahead and look at gold and silver. Big day yesterday for both. The data here on TradeStation is a little bit screwy. I'm not sure what's going on with it. TradeStation sometimes has some data issues. It's not a big deal. You can see here, what I was wondering after that big smash down on gold and silver is where support was going to come in. And of course, now with what Powell did yesterday, he's put a nice floor here underneath everything, including gold and silver. So made a nice run shorting silver last week. Those of you who've been following the channel, you know from those pre-market forecasts that we caught a very nice piece of this chunk to the downside here. So that was awesome. And I said heading into this week, I said, oh, well, you know, maybe I'm going to be looking to reshort silver somewhere up into the $24 area. No more. Not after what Powell said yesterday. I think, you know, you can see the monthly here on silver coming out of a very nice support pocket. That should be a good floor for silver moving forward. And I think what we're going to see now is, you know, silver, crude oil, the commodities, corn, wheat, soybeans, they should all probably catch up now to stocks, right? Because stocks have been pushing higher while commodities have been going lower, especially crude oil. But I do expect now the commodities to round the bend and catch up to stocks. So keep an eye on that. I'm going to just trade the stocks, the Nasdaq specifically, because I think it's, you know, the easiest to day trade for me right now. Good volatility. And importantly, it's directional volatility, right? It's volatility with an upward bias, which is very, very good to trade the Nasdaq. Sometimes I will trade the Ultra bonds. If stocks get choppy and crazy, then I don't want that kind of volatility. But for right now, the Nasdaq is fantastic, so hope to continue to put up good numbers. Let's go ahead and jump over to crude oil. Crude oil made a nice recovery yesterday. We talked about this. I didn't know if that was a stop hunt down there below 70. It now looks like it was. And I would be shocked here. If crude oil can't get a rally going now after what Powell said yesterday, then that is not looking good for crude oil longs. So let's see what happens. It's still a little too early. We're not out of the woods yet with crude, although we are, you know, rounding the bend or attempting to a little bit here along with gold and silver, but still a little early. We got to see if this $70 area, which in my mind is a crucial support level. We got to see if that holds by the end of the week. And if we start to hold there and push higher, then it looks like crude could be at the beginning stages of a pretty big move back to the upside, especially if the situation in the Middle East escalates. We'll see. All right, let's finish it off here with the currencies quickly. The dollar fell off a cliff yesterday. This is the euro futures. You can see when this goes up, the euro gets strong, dollar gets weak, and we exploded to the upside there yesterday. No surprise after what Powell said. And now we are looking to push higher. So look for, everything's in place right now. You've got a weak dollar, you know, you've got strong bonds, dropping yields. All this is going to put a nice floor under stocks. And I think it's a good opportunity to make a lot of money these next couple of weeks as this Christmas rally plays out. So, you know, I want to keep you guys ahead of the curve here so you can take advantage of this. No need to really look at the currencies. They're all strong against the dollar. Dollar's weak. It doesn't look like anything's going to change right now. So if you trade FX, just look to short the dollar and go long, you know, the euro, the pound, one of these other FX pairs, maybe the Australian dollar. All right, let's go ahead and look at Bitcoin for the Bitcoin bros to finish it off here. Let's load the charts. TradeStation just kind of hanging out, taking its time. It likes to do that sometimes. I think they've stopped. I think TradeStation is just altogether given up on putting more money into their technological infrastructure. They're just like, we don't give a shit anymore. I don't know. I like TradeStation. I know how to code within their easy language. So for me, it's fine. It's kind of pisses me off sometimes, but it is what it is. All right. So for the Bitcoin bros, you can see I'm not going to keep talking about the fact that we warned you to be careful longing up here. Because I thought it would catch down to gold. It did. And now that that's happened and gold and silver are rounding the bend and everything else is also favoring risk on, I think the crypto bros, you guys are in the clear. So it's looking like this is probably going to be well supported along with everything else, and a good opportunity to buy dips, you know, on Bitcoin if it pulls back more. I mean, if Bitcoin pulls back more at this point, I'd be shocked, just because of what we're seeing in the dollar, bonds, yields dropping, stocks pushing higher. So I think Bitcoin should round the bend here now and push higher. And that also is going to be supported by gold rallying and catching back up. What I was saying before is you don't want to be long Bitcoin on a breakout to the upside when gold is getting smashed to the downside. And you got to see a really good example of why I was warning you guys about that. But now I'm going to give the crypto bros the all clear, the green light. Go ahead, get yourself another gold chain. Go buy a new Lamborghini. You guys are looking good. I think it's going to the moon. Have a lot of fun with it. And I will be back for the live trading session for myself here for the ECB and retail sales at about 8:30 a.m. Eastern. And we'll just hope for another good day. But remember, long on the indices. If you want to lose money today, if you want to really put yourself in a tough spot, just look for spots to short continually as this thing continues to push higher. That's a joke. Don't short. Go long, stay long, and have a good day. Good luck, everybody. Take care.